G'day, it's me again, Richard Hemming from Under the Radar. Just cracking open another boutique beer. That's what we are. We're all boutique in our minds, at least. It's called Dry Coffee Porter by White Bay, a local label. So let's give it a crack. Oh, the sound, the COVID sound, better than Simon and Garfunkel, I can tell you that. Anyway, I hope you're all doing well. You know, we're thinking of you here at Under the Radar. And we're back. God, it's got coffee notes. You could double up in the morning with this one. This is quite... It's got that dual advantage of being able... It's called Drip Coffee Porter by White Bay. It's got that double effect of upper and downer, which is, you know, pretty much what we're talking about today at Under the Radar. We're going to go through the big picture and then we're going to get into stock specifics as usual. Pretty much, you know, how can you go past the word delta? At the very least, it's taught a lot of people sort of a fraction of the Greek alphabet. And this week, the Delta strain and the impact that it's having on global growth expectations has been front of mind. When the markets have moved in such a huge manner, you know, there's going to be some bumps in the road. But as we said last week, you know, bond buying is what to look out for, and this has continued. And what we're seeing, I guess, you know, which was, I guess, highlighted by that bond buying, was that we're seeing an anticipated V-shaped recovery turn into a W. So, you know, that's not the worst thing in the world, but it's something to look out for. It means, like, for us, it means don't chase. So when you see stocks going up, you don't want to be chasing them. You want to be calm. You want to be cool. You want to grab maybe not a Drip Coffee Porter White Bay beer, but you certainly don't want to be panicking and going to the top shelf liquor, in the words of one state premier. So this week, I mean, was interesting also because we had the National Bureau of Economic Research in the US saying that they had the shortest recession on record of just 2 months. So this was, of course, juxtaposed by the market's sort of fear. And I guess what it means is that the key is to look for value, and the key is strong balance sheets. Now, I want to talk about balance sheets for a second because, you know, that's been a highlight for many investors this week in the Australian markets because ANZ kicked off the capital management program of the big banks, or the much anticipated capital management program, with a buyback. So what we're looking at here is a strong balance sheet put into action. ANZ's one of our favourites, and it's certainly you know, good value on our model. But what it also means is that Australian is putting pressure on the other banks to engage in capital management. So we could see one of the biggest sectors in Australia putting money directly into investors' pockets. So that's a big deal. On the growth front, we're glad we like stocks that aren't priced like they're going to the moon. I mean, that's one of our points of pride or points of difference at Under the Radar report, not paying up. And this week we found one of those growth stocks at a reasonable price. For those, you know, who are, you know, going back a few years, you might remember the GARP sort of mentality that was pioneered by First State and Greg Perry. But this stock we found in the market, and it's got double-digit earnings growth, it's got dividends, it's got what we like, and it's got like a diverse client base. So that's one worth checking out in our small cap publication. As I said, the key for us is not paying up and looking for quality. And quality might mean dividends, but more important than dividends is the balance sheet. Because if you've got a strong balance sheet, then you can ride out the troubled waters. I mean, one example, I guess, is for that comes to mind for me is Fortescue. Like Fortescue prior to the financial crisis, so this is going back a few years between 2008 and 2007, 2008, went from $1, less than $1 to $11. And then it had strong cash flow, but it had a weak balance sheet. Then suddenly commodity prices fell, and so did Fortescue's cash flow. So it went straight back down to $2. So that highlights why balance sheets are your best insurance. And also what we're seeing in the market this week was more takeover activity. I mean, that's on the up and up. I mean, let's have a toast to that. Back to the boys at White Bay. We're seeing more evidence of takeovers. We saw Empire in Under the Radar's universe. We also saw Web Central, and this is off the back of the bigger players, Sydney Airports, Wesfarmers taking over API, which we discuss in this week's Blue Chip, and the Santos and Oil Search merger. I mean, there's takeovers happening in small caps all the time. I mean, something like 1 in 5 of the stocks we've tipped in the past 10 years have been taken over. That's not an accident. It's a numbers game. There's simply a lot of companies out there, and there's a few companies, a few big players looking for growth. On top of that, you've got private equity. Right now, we've got low interest rates. Right, what does that mean? Let's look at Wesfarmers. I mean, on our numbers, they're getting a 10% return on their investment, on API, and you've got, 1% interest rate, so it's costing them 1%. I mean, talk about earnings enhancing is like a no-brainer. So you need to be exposed to small caps to give your portfolio that small cap takeover boost. I mean, that's the bottom line. Any of the stocks we cover could be candidates. Let's go through 3 of them. One of them is probably unlikely to be taken over. I mean, let's be honest. Macquarie Telecom, I mean, we picked that about 5 years ago, and like it was under $10. Now it's over $60. I mean, basically, when we were in it, Perpetual bailed out of the stock, having done some hard yards, but it shows the advantage of being a retail investor that doesn't have to have that 3-month, quarterly or that 3-month update to their investors. I mean, it also shows the importance of founder. I mean, these guys, Macquarie Telecom, came from the Tudor Hope brothers and are still owned 60% by them. They haven't raised any equity. So many of the small caps we covered were family businesses at some point. So there's focus and incentive. So as a minority investor, you want to piggyback that kind of hunger, and you of course want to understand the business and the niche, and they have a great niche in the data center world. Then there's Praemium. I mean, here's another stock that we piggybacked on, but for different reasons. I mean, this stock is also in a growing business, in the world of fintech and fund platforms. And like we've seen a lot of management we've seen a bit of management turnover, certainly a lot of politics going on up the top. But in the end, it's much easier to make money from a growing industry. I mean, management don't have to be brilliant in a growing industry. Management are going to make mistakes, and it's much easier to look through those mistakes when there's underlying demand for their product. I mean, in Praemium's case, I think we make there's a certain degree of takeover premium, but it's on the blocks that there's a big chance, if you read our issue, why we think it could get taken over by one of its competitors. Basically, fundamental analysis has never been more important, and this is even stocks that have grown from us covering them for a long time, and one such stock is Evolution Mining, which it's a stretch to call it a small cap now, but when we covered it was like 300 million. I mean, I've known Jake Klein for a long time, and I was always impressed by his nous, by his acumen at understanding assets, how to get the most out of assets, and trading assets. This company's benefited from size over time. Peter Chilton's done the numbers on it, so he shows why he thinks the market, got over-egged on the downside in selling off this company after its last quarterly. And now, as it happens, he's working late. He's going to be working late into the night, running the numbers on this latest acquisition and share raising. So we'll be sending that out to investors tomorrow in an update. Anyway, it's great to have you on board, and of course you'll be looking forward to the upcoming issues. But before that, let's just have another draft of this. Get that working classy. Let's see if it's more spin or substance. Our dog thinks not. You know, one of the legacies of COVID is working beside your pets and your children. And let me tell you, honesty is always a good policy. But, I mean, the point about working classy is that we're working very hard, and so are we, and we've got these fund managers who are raring to go in next week's issue. We've got an update on Evolution Mining. We've got a lot of updates coming up on stocks, and we've got previews of the upcoming reporting season. So it's an exciting time in the market because we're going to be looking at the reporting season and what we think the companies are going to be saying, because that is the key. It's the outlook statements. So here's to you. Best of luck with everything, because I know you're doing it tough. We're doing it tough. We're all doing it together. Cheers. Oh, well, as far as this beer is concerned, coffee and beer, does it marry them together? Is there a marriage worth your money? Listen, I'll have to finish it and let you know next week.